Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
As I've been saying for some time now, and I'm not the only one speaking about this, we're basically at an inflection point. What's going to happen here? Bitcoin leading crypto markets, is it actually in a bear market? If so, are we finally approaching this tipping point, as some analysts have cited, where alt season is going to finally start and XRP is going to take off? Well, maybe, but there's also another idea that crypto markets have forever changed. And in fact, I want to share with you some brand new thoughts that were shared by a director at Fidelity, which is a gigantic asset manager. In fact, Fidelity has somewhere in the neighborhood of $4.2 trillion in assets under management. And I want to share with you what a director at Fidelity had to say today about Bitcoin specifically. And I'll tell you what, and part of what he's getting at, I'll just tell you this in the intro here, part of what he's getting at is that volatility for Bitcoin is forever diminished, and he gives his rationale as to why. Doesn't mean it wouldn't substantially outperform other asset classes. That's not what he's saying. But in terms of historically what we've seen, the crazy 100,000-fold increases ups and down for Bitcoin, those days have passed. The ship has sailed. That type of quick, life-changing wealth not happening with Bitcoin, if he's indeed correct. And people have been positing this position for some time now. You know, have we reached this position where now we're not going to see these 4-year cycles anymore, which is totally worth talking, because at this point, if 4-year cycles were behaving exactly the same, then we'd be where we were 4 years ago, which is a very, very deep bear market. So is it just the case that we're going to see less really fun volatility to the upside, but also more shallow bear markets? Because they would go hand in hand, mind you. Is that the case? Well, let me share with you this thought. If that's true, then XRP is one of the last altcoins where you could still achieve in short order life-changing wealth. And why? Well, it's for the same reason that Bitcoin has been so life-changing for so many people for over a decade. And part of it, you could put it in simple terms, there's not that much money in XRP now, so in order for you to get a multiplier effect, it doesn't take that much money flowing in. But for Bitcoin, it's been adopted to a sufficient degree. It's being viewed differently. Institutional money's coming into a much greater degree than any other crypto on the planet, and that is true, and that's fine. And so while that's great for Bitcoin, and it's the most adopted in that regard, it also means that for the typical retail investors out there, that's not where the greatest opportunity is. Now, it's also fair to state that, assuming that's correct, Bitcoin is, quote-unquote, like less risky than any other crypto on the planet. That's the way it's viewed, if this theory is correct. And I still think utility matters. XRP is functionally useful today for businesses and enterprise-grade software, and I think most people don't even know that. But even setting that aside, I'm just talking about the way in which humans are speculating on these assets, specifically XRP. So again, if this director is correct, then my personal belief is that altcoins, and certainly specifically XRP, like this is the last hurrah for this type of quickly life-changing wealth. Like we're nearing the end of this type of opportunity if this theory is correct. And it may well be. Look, I've been saying for many years, I kid you not, back shortly after I started this channel, I was saying this. I said eventually, and I've been saying it even recently, these crypto asset classes, the crypto asset class, as it matures, it will become less volatile. And it's so easy to understand why. The simplest way I can always dumb it down is what I was saying just a moment ago. Think about how much money would have to flow into Bitcoin to get it to double in price versus how much money has to flow into XRP to get it to double in price. Way less has to flow into XRP. So the more money flows into the space, the harder it is to get that multiplier effect, the less volatile that it is. And this director at Fidelity, there's a reason I want to share with you all of his thoughts on this. And he's got a chart too. The reason I want to highlight this is because, again, nothing against Bitcoin. And it's not that you can't make sure, end up, some longer period of time, ending up incredibly well off, assuming it continues to be adopted. But that's not where to go for. Let me word it this way. If you want the same type of activity in terms of ridiculous returns that Bitcoin has historically offered, you're not going to get it in Bitcoin anymore if this guy's right. You're going to get it in XRP and other top cryptocurrencies. And look, I don't have a financial background of any kind, so just understand this is not financial advice. You definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys talking about this stuff all that's going on here. And meanwhile, I'd like to highlight this too. Ripple is trending. How about this? Now, obviously, Ripple's different than XRP, but XRP trends from time to time too. Look, this is from XRP community member XRP Crypto Wolf, who simply wrote, "Ripple is trending, 57,700 tweets. What do you think's going to happen when the news breaks that there's some sort of settlement between the SEC and Ripple, which is what I'm anticipating? That number's going to look tiny." And and I don't think it'll just be Ripple that's trending, because think about what that might do for the price action of XRP. People are paying attention to this, folks. XRP, the prices that we're seeing now, they won't be here forever. That's my personal belief. And take a look at this too. This is worth highlighting from on-chain analyst Will Clemente. He shared the chart that's on your screen right now, and he wrote, "Bitcoin whales have been accumulating for over a month now." And I've been highlighting news like this as it pops up, but I wanted to highlight this too, and I haven't mentioned this yet. But retail investors, your typical retail investor, very different than how institutional money chooses to allocate their funds. But the typical retail investor, they're investing at a 10-month low. So think about this. Institutional money and whales coming in, typical retail speculator, which I think responds emotional. I think that's very easy to prove is the case. Seems to be less informed. They're not paying attention now. Why? Well, there's lack of impatience. It hasn't been as exciting, but these are the times that everybody else pays attention. The smarter people, the institutions, the whales, and you, frankly. If you're paying attention right now, you're outside of the norm. You're not like the typical retail investor. Investor. And so take a look at this. This is the individual I was speaking about. This is Jurian Temer, and he is the director of global macro at Fidelity. And he shared this all up on the Twitters. In fact, I'll make this first tweet full screen so that you can see this chart that he shared. This is the Bitcoin supply and demand. And you can see that the blue line is the supply model, which is stock to flow, which was originally applied to Bitcoin by Plan B, who has almost 2 million followers at this point. and then there's the demand model, this pinkish purplish line here. And you'll see as I go through this, part of what he's highlighting is that the stock to flow model it did a real good job, especially for most of the life of Bitcoin to this point, providing reasonable expectation of where the price was going to go. And he's saying now Bitcoin's at a different place in terms of adoption, where it's actually more demand driven. And if this is true, and it may be, like, we're all going through this in real time. I don't pretend to have all the answers. Nobody knows for sure. I've only held the position that, yes, that will become true over time. And I didn't know exactly when we'd see it to some notable degree. Maybe it's now. It's certainly plausible. Don't know for sure, but it's very plausible. And that's, again, why I say, though, if that's true, which is inevitable, it's coming, it's going to hit Bitcoin first. It hits Bitcoin first, and then the smaller cap coins. Then those will be the only coins remaining where you can have those types of multiplier effects that historically only that Bitcoin was offering. It's only gonna be available, those types of returns, in the smaller cap coins, and most of those coins are going to go away. So I'm not encouraging anyone to buy or sell anything. Just to be super duper clear, I'm not saying that I think all of them are gonna do whatever. Not necessarily. I still believe in the concept of alt season, but in terms of long-term viability, I'm not saying that they make sense for that necessarily. So here's the chart on your screen, and here's what he wrote. Bitcoin boring? Gasp! But boring is good if you want institutional adoption. Is the efficient market hypothesis replacing the go-go price discovery of yesteryear? The chart above shows Bitcoin's fundamentals. The supply curve is dictated by the stock-to-flow model, and the demand curve is driven by network growth, Metcalfe's law. So that's what I was highlighting here. Again, the blue line, stock-to-flow, and then he's talking about a demand model here, so Metcalfe's law effectively, in terms of that type of real adoption, and where that would lead, so different models. And then he wrote the following. Until recently, Bitcoin would often overshoot its intrinsic value to the upside during bull markets and to the downside during bear markets. It was a momentum game with little to no resistance until the trend reached exhaustion. So folks, that's a fancy way of saying whatever it's reasonable to value Bitcoin at, people way overshot it to the upside and then tremendously undervalued it historically, which is why you get these extreme ranges of volatility. That's what he's highlighting there. And then he continues. But take a closer look at that chart above. In recent months, the price of Bitcoin has stopped tracking the stock to flow model and has instead hugged the pink line, which is the demand model. That makes sense to me. While the stock to flow model has been an effective model in the past, in my view, the demand curve will be the dominant driver from here. So in a more efficient two-way market, Bitcoin should deviate around that pink line, up and to the right. So pause again. This is why I keep saying assuming Bitcoin's going to continue to be adopted by our human species. If that's the case, you'll keep seeing it, and in terms of dollars, it'll be worth way more in the future, substantially more in the future. But in terms of the multiplier effect, not nearly as much. I hope this is making sense the way that I'm explaining it. That's why I'm saying, if you want the, 20-fold, 30-fold, 50-fold, 100-fold returns, you're not going to find it in Bitcoin unless, or if you are going to find those returns in Bitcoin, then it may happen over a span of decades at this. Because what type of adoption are you talking about at that point? Even if, so say you're talking about a 50-fold increase with Bitcoin, just pick a number, which would be easily attainable for smaller cap coins like XRP and others, I think. I mean, I'm not making a price prediction, but I don't think that's crazy to suspect that might happen. But if you're talking about Bitcoin, not that it can't happen for Bitcoin necessarily if it's going to be that dominant, but you're talking about somewhere in the neighborhood of a $40 trillion market cap, and a lot more money would have to flow in to get there. I'm not saying that can't happen, but imagine the amount of time it would take to play out like that, which is why I'm asking you, where do you think the real opportunity is? That's the point that I'm getting at. It's in XRP and other cryptocurrencies, and you listening to this, you've adopted crypto early enough. You're among the last, I'd argue, where these types of opportunities are still here, but they won't be here forever. Eventually, investing in this asset class is going to be just as boring as investing in precious metals. It's going to look like that in the future. You're still here in the really exciting times, though. Maybe it's not as much available for Bitcoin at this point, but for other cryptocurrencies, yeah, it is still here. For now, but even that won't be here for now. Eventually, XRP is going to be boring to invest in because it'll have been adopted, right? Or we're wrong and it goes to zero, fine. But you get the cut of my jib, right? So anyway, he continues here. Here we go. Institutional investors have likely created their own models by now, and therefore know when Bitcoin is cheap or rich. For instance, if the demand model says that Bitcoin's intrinsic value is $50,000 today and $100,000  2 years from now, and he writes in parentheses, my thesis, then at $30,000, Bitcoin is going to look a lot better than at $70,000. That's the difference between a 2-year gain of 3x and 1.5x. While a 25% CAGR, which is compound annual growth rate, is still a lot, at a volatility of 50, the Sharpe ratio would only be a middle-of-the-road 0.5. The starting point matters for all assets, including Bitcoin. So pause. It's kind of like that idea of buying low and selling high makes sense when nobody's paying attention and it's scary to buy it. History has shown for the stock market and crypto, that's when it makes most sense, including for XRP, by the way, just to be super duper clear. And then he continues. As Bitcoin's value becomes better understood by more and more investors, there could be more efficient accumulation when Bitcoin swoons and more determined distribution when it moons. That's what makes a two-way market. Now remember, price is what you pay, but value is what you get. In the early days, most investors only knew the price, but as investors better understand valuation, Bitcoin is less likely to resemble the early boom-bust days and could start behaving like a traditional risk asset. Pause. Ding, ding, ding. That's why exactly what I was trying to get across starting at the intro of this video. He said again, Bitcoin is less likely to resemble the early boom-bust days and could start behaving like a traditional risk asset. Yes. The question is when. Is it now? Maybe. Maybe the answer is now. Is it now for XRP? No. But that's good. That's good, because that means the opportunity is there. Would you rather buy Bitcoin now, or would you rather have bought it now that knowing what you know? Would you have rather bought it back in 2011? Would you have rather bought it for $100 or $10 or $1? Better back then, right? Now less certainty, greater risk, because let's be real. Yes, now with the benefit of hindsight, the answer is obvious. You would have rather bought it that cheap. But back then you lived and you didn't have that information. So it was much higher risk, and almost nobody even knew about it. But you get what I'm saying here. The early boom bust days of Bitcoin, either they're over or they're about over. So again, it can still outperform other asset classes, and Bitcoin can be a far better investment than just throwing money into stocks. And I'm all about diversity in terms of investing various asset classes, index funds, all that stuff. But even so, I'm just saying, the excitement that has traditionally been a part of crypto, maybe it's gone for Bitcoin, it's not elsewhere within the crypto asset class. And then he wrapped it by stating, if indeed price starts to move more closely around an upwardly sloping demand curve, it will be more important than ever to get that demand curve right. More on this in an upcoming thread. So I'm going to follow what he had to say. When I read through that, I was like, look, I don't know for sure if this is the moment. Maybe it is indeed the case. And the valuation models that were used in the past are no longer going to apply. There's more money in the space right now in terms of real-world adoption. That's mattering more. The asset class is maturing. I buy into that concept. I don't know for sure if it's now, but the concept I buy into. I've been saying that for years on end. And I think it's going to happen to XRP too, like I said. So, and it's so interesting because Bitcoin does lead the market, and we haven't seen a historical blow-off top like we saw last market cycle, where in a matter of several weeks, Bitcoin went from $10,000 to its then all-time high of about $20,000. We haven't seen something quite like that. So what the heck is going on? Is it really just an extra long cycle? Or is it something different? Is it really sufficiently mature and there's enough money in the space and institutional money's coming in that it's less volatile? Because again, understand, when you're talking about institutional money coming in, that behaves differently than emotional retailers buying and selling. They're more likely to stay the course. And it doesn't mean they won't take profit. But when are they going to take profit and when are they going to purchase? Think about that. Very different from what the typical retail speculator is doing here. So we're going to watch. Now, either way, whatever's true, though, an important takeaway here is also that the opportunity is still there for XRP. As far as I'm concerned, humans, they're behaving in this pretty clear fashion. They're still speculating wildly on everything, including Doge, including Ethereum Classic, which still exists for some reason. Like, money's going into all of these things. The asset class, that's a clear indication, very immature asset class. So the opportunity, to me, it looks like it's still there, even if this guy's right, and he might be.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.